welcome on board Rohit Srivastava as well to talk to us about the technicals of the market. Rohit, why don't we begin by discussing the auto sector itself? Of course, fundamentally, there's a lot of things at play, right from rural recovery, CV upcycle, to that entire IPOs coming in from the likes of Hyundai as well as Ola. But on the charts, is there any recommendation to be made here?
Yeah, I think you're right. The momentum in the auto sector is pretty good. I've been tracking the two-wheeler stocks, which have been, pretty much outperforming within the segment. But I am looking at also the four-wheelers joining in. So, of course, that's like, the couple of names in that area, of course, TVS Motor, Hero MotoCorp, they've been doing pretty well. Maruti started to pick up. I think somewhere that has to also, join into the whole move. And so that is what is really happening. I think the auto sector would get an additional trigger when bond yields actually start falling, because these are interest rate sensitive sectors. And I think we are on the cusp of a reversal on the interest rate trend also. So that is why I think there will be additional triggers for the auto sector pretty much across the segments. So it should remain a strong sector for the months to come.
So auto could be one of those strong sectors for months to come. But what about the strength in the index itself? We have been hitting fresh record highs. Is this a momentum you expect to sustain, or is it going to be sideways, a bout of profit booking ahead of budget? What's the expectation, and how should one play the market, let's say, for the next 1.5 months?
So if you only talk about the Nifty, I would have liked to see some kind of a consolidation, or rather pullback at this point after this 4-5 day one-sided move post the election results. But we're actually not seeing that. In the meantime, the VIX has come down sub 15. So that brings back some comfort. It was at almost 30 before the election results, which is very high to really, play the market. Now that it is back to a 14.5 kind of reading, if it does drop even to 13, 12, whatever, this is a comfort zone now. Once you have sub 15, it's manageable volatility when it comes to trades, putting your stop loss. So I think that sets us up for a potential continued move to the upside. But I do think it can remain, till we really significantly surpass, say, 23,600, we can remain in a consolidation mode ahead of the budget. But if we do get past that range, then it would look like a budget rally, and even if you do pull back a lot, I would look at buying the dip. And even from there, you can start off on a rally of expectations into the budget. So that is the set of possibilities. Which means that the downside is limited. We just don't know whether time or price-wise how much that is going to be. But eventually, we are going to be headed higher. And that is something to be prepared for. In fact, there could be a lot of stock-specific movements to really watch out for event to event. Like, for example, tonight you have the FOMC meeting, which is going to speak on rates. So again, that brings us back to rate sensitives. It also focuses a little bit on the commodity sector, because US rates directly have an impact on the US dollar. We've already seen a short-term correction in commodity prices globally. And if they do start picking up post the FOMC meeting, then that brings the focus back to the metal stocks. So those are the sum of things to watch out for. So Nifty downside, I would say probably not below 22,800 right now is what we would think. Eventually head well above 24,000. The only thing is, from here to the budget, will we consolidate before making that move? Slightly tough call. We'll have to take it on a day-to-day basis and look at the opportunities in between.
Okay, point taken. So that's the view coming in, Rohit, as far as the market mood is concerned. Thanks so much for making time and speaking with us. But
if you like this video, then like, share and subscribe to ET Now.